Well, the Innovator Equity Premium Income Daily Put Right ETF, better known with the ticker symbol SPUT, aims to stand out by selling puts instead of calls, which the firm says offers a strong alternative for investors. Joining me now with more is Andrew Nelson. He's a director of product strategy at Innovator ETFs. Andrew, welcome and congratulations.
Thank you, Kristen. Great to be here.
It's great to have you on the show. And what more do our viewers need to know about this product in your words?
Yeah, even your description just now that it sells puts instead of calls is probably the most important differentiator. So the covered call landscape for ETFs is booming. The derivative income space is absolutely huge. We now have over 100 ETFs, $100 billion in the asset class. So there is a need for a differentiation. We think that's selling puts instead of calls. And it helps a number of ways. We can talk about that in a minute, but it really is about doing things in a different way to provide income and yet give you market-like returns with less volatility.
How actively managed is this fund?
It is actively managed, but we call it systematic active. It's following a rules-based scenario where each day it's doing a one-day put. Each day it's rolling the portfolio in a systematic fashion. So there is an active component. It is an active ETF, but it's not a stock picking ETF. We don't have folks behind the scenes picking the names they like. It's the income generation that's active in that sense.
Interesting. So talk to us more about the behind the scenes that you were alluding to earlier.
Yeah, so if you look at the puts versus calls,
yes,
historically puts generate more income than calls. And what we're doing is a bit more unique, that we are doing it in a short dated fashion. We're selling a daily put. Every single day we roll the put. And we're doing it in a delta adjusted manner, or a fancy way of saying that we are deep out of the money. So when you combine selling puts for more income, doing it on a daily basis to reduce your risk, and doing it deep out of the money, you end up with this very kind of bullish positioning in the portfolio, because the income comes in. Very rarely do the options actually finish in the money, and you have just this kind of boost in the portfolio, and we're targeting about a 7% yield on an annualized basis.
Interesting. So why would this be attractive to an investor in this particular environment?
So it's about being a complement to what they already have in the portfolio, being differentiation in that sense. So if they hold, say, one of the larger covered call ETFs, SPUT can complement that by the put side of the ledger. And even in today's environment, we are coaching our clients to expect a wide range of outcomes. I think if you talk to anybody that says they know what's going to happen, they're probably not telling the truth. And so you could say, hey, do we have another 20% pullback still to come? Are we going to rise another 15%? You really just don't know. It feels a lot like COVID in that sense of just the unknowns. And yet in the middle of all that, people need income. People need certainty. And so this is what we're trying to deliver with SPUT.
Interesting. How much went into the development of this ETF?
A lot. There's a lot behind the scenes. We have a number of partners. There's a lot of time and a lot of effort being done. This has not been done before. It has been offered in maybe an institutional caliber wrapper in the past. We wanted to democratize that, bring it to the masses in the ETF form. So it's really is first of its kind and nothing else like it right now.
Interesting. So walk us through here what might be a bear, bull, and basically just steady case.
If you talk to our strategy team, this is about the first time we've had this wide range of market analyst estimations from the street. We think, though, if from the bull case, we could see the tariffs coming off, maybe you give China a break, the S&P rallies maybe to 6,300, yields come down in that 3.25 to 3.75 range. That would be excellent. We would love to see that happen. The base case is more right in the middle, a moderate to slight growth into the end of the year. We stayed down on the year for the S&P. Yields are range bound in the 4 to 4.75 range, and you need the income there. The bear case, which is concerning to a lot of folks, is that, yeah, the S&P pulls back. We have sticky inflation, tariffs stay high, and again, yields spike above 5%. Now, we are turning toward kind of our neutral or our base case, but really, again, in all of that, how do you position a portfolio is something like an SPUT works in those scenarios across the board, we think.
So going back to the active management component of this, Andrew, how often are the particular holdings changed?
So the holdings are going to be S&P-like equities. So you actually are exposed to large cap equities, as you mentioned in the introduction. And so those holdings will actually not change very often. We do a quarterly rebalance for the portfolio. But again, that's more to bring it back into line for the weights of the portfolio. What you should care about more, again, is that income generation component. So as I mentioned, we are not really stock picking here. This is not meant to be an alpha generation on that sense. We are trying to track market-like returns with, again, additional income and less volatility.
Interesting. So you hear kind of some action down there on the trading floor. We're just about 5 minutes away, Andrew, from the market open. Certainly seems to be a headline-driven market these days, right? And fundamentals might give us more clues as the earnings season really ramps up here. Anything more that you can share on your view of equities right now?
So we feel that the earnings right now that have been coming out, some misses, some kind of pulled expectations, that seems like par for the course. We think that really you are looking at this, again, kind of base neutral case where you'll muddle kind of sideways, you'll have a choppy choppy market, and into that choppiness, you want to have, again, income generation.
Yep.
And so we think in this earnings season, you'll see continued some misses. You saw Tesla rally, even though they missed their earnings, now they pulled back yesterday. So there's just the uncertainty there of what's going to happen. And we think stepping into that with more of a balanced approach is probably the way to go.
Are there other funds that you think might be in the works that could be helpful during this kind of environment as well?
And one that we have I've kicked around for a while internally is taking more of a even a higher risk measured approach where we can say protect majority of the downside altogether using options in the portfolio and maybe capture some of the upside in both a down and an up market. That's possible with options contracts. And so you might see that come out in some point in the future from our side or from others. And there's all these different ideas of taking the structured product world and structuring outcomes, putting it into the ETF wrapper.
Got it. Andrew Nelson, he's the Director of Product Strategy, Innovator ETFs, joining us in studio here. Andrew, thank you.
Thank you.